Hi, and welcome to Sunday Night Charts. We take a look at charts to help you with trading week ahead. I'm your host, Steve Van Meter, and on the Monday Macro Show, my friends, we're going to be talking about margin debt. Let's get right into this, because margin debt's off the charts. Moving averages on the colors on my screen: 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is the general direction prices are headed. Momentum is the rate of change, a bullish indicator for both this positive and bearish indicator for both this negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is the level sellers can't break. Or resistance is where sellers are at, and support is where buyers are at. Keep in mind, technical analysis does not predict prices. It can be used to determine the risk of trade, help with time and trading, provide the direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. I have made sure that we're consistent now on the secondary momentum screens, which mind you, I really like these a lot. I mean, the ones up here, if you want to know which ones do I focus on the most, is primarily the intermediate term. The long term is cool. I really like the intermediate term, and I'm primarily interested in the 6-month momentum. They're slightly different variations of each other, but they're very important. So looking at the S&P 500, it's gone all green. Some of you have said in the past, when you see green on Steve's screen, probably time to sell. It's hard to do technical analysis when there are, if you look at, hey, where are sellers at? They're not here, right? I mean, that's why prices are rising, because people do not want to sell this market, or that those are selling are being overwhelmed by the flood of people that just can't get enough of this market and want to buy. So really no story to say on the S&P 500. I will continue to suggest that another tag of the 50-day moving average would be constructive for new all-time highs, but that doesn't seem to bother investors at all. How about the NASDAQ 100? Only change here is on the intermediate term. Annual momentum flipped bullish, so no other real change. And kind of the same story as the S&P 500. I mean, sitting right near all-time highs. Needs another tag of the 50-day moving average, maybe even the 100. Is seen that's been a point here. How do you do technical analysis when you are at all-time highs? Well, you don't. You just kind of wonder where the sellers are going to come in. And again, we'll talk about margin debt and why this market is moving up without any regards on Monday. How about the Russell 2000? This has not changed in weeks. It is bullish. Everyone's super bullish on small caps. Why? Due to stimulus. People believe the stimulus will save the U.S. economy. So again, very hard to do technical analysis when you have no sellers in the market. People don't want to sell because why should they? People want to keep bidding prices up, and so sellers are patiently waiting to sell at some point in the future. When that day comes, who knows? Even energy, still bullish across the board. No changes, but we're seeing some change on the charts. Let's take a look at that, which would tell me that we're likely to see energy potentially see a change in momentum here pretty soon. For those who are bullish on the energy sector, you want to see a tag of the 50-day moving average at this point. I thought we were going to get a potential sideways move here. Prices went up. It's rolling back down. It's hitting resistance at a place going back to its June highs, where we saw resistance and a similar area of resistance back to March. So you now have 1, 2, 3, very clear sign of where sellers are at. Question is, can buyers overwhelm them, take this higher? You can never go wrong with a bounce off of moving averages when you have the 50-day, the 200-day, and the 100-day sitting all there. The question is, can investors do this despite the fact that a lot of the country is still on various forms of lockdown? Parts of Europe are all in lockdown, and there is a waning demand as people go on the unemployment line. 900,000 the last 2 weeks for drawing unemployment claims. Not going to be out driving a lot. How about financials? Ultra short-term bearish. Annual momentum flip bearish. Everything else is green. You want to talk about something that is massively overvalued on the hopes that borrowing is coming? Well, check this out. You've got a triple top. Prior all-time highs at the great financial crisis. Recent ones here in March or January of 2020, March 2020. And then now, I mean, very clear where sellers are at the all-time highs. I don't understand why people are bidding financial stocks up. Banks are not lending and unlikely to. Utility sector was once the place to be. Annual momentum still bearish across the board. A little flip in price on the ultra and short term. Let's go take a look at the utility sector, and you can still see that now what's not showing on the bottom here is the 12-month momentum. This is red. So what you see here is not usually a good sign. When you have anti-momentum, slightly different form of this red, that is a point where you're either exiting a position or hedging the downside, and that remains the case here with the utility sector, just in this sideways chop. The question is, will the sideways move mean the buyers are going to overwhelm sellers and take utilities higher, or are the sellers going to overwhelm the buyers and take utilities lower? Not enough information at this time to make a clear call either way on that. Looking at the industrials, should again see a mirror of what we saw in the large cap indices. Price bullish, and momentum almost all bullish. No real changes here. We should not see anything that surprises us on XLI. And sure enough, we can zoom out and we see it too, trading right near all-time highs as people bid up the utility stocks. And there you go. I mean, it's just a similar story across the board. Everybody's bidding everything up. And the one thing that doesn't make a lot of sense to people is large gold mine stocks, GDX, even the juniors, people that are very bullish on inflation, bearish on the dollar, do not understand why gold miners aren't higher. I don't blame them. If I had their view, I would too. Keep in mind, gold miners are a proxy of liquidity. We have price momentum across the board, bearish. The 3-month is, we'll say goldish colored here. And what this means is 3-month momentum is still negative, but it's rising. 6-month momentum is negative, and following 9-month momentum, 12 annual momentum, both positive. Let's take a look at GDX, because one of the problems with GDX is it's sitting under its 50-day moving average. It keeps rejecting. Remember, cross the 50-day and tag underneath is a bearish signal. People don't believe it, but it's how it works. Now, when you want to know where the buyers are at, they're very clear. Buyers are right here between, say, 33.25 and about 35.25. So there's $2 range, very clearly where buyers at, where sellers are above that. Now, what's interesting about GDX to me, and this is something in his second Real Vision interview, I interviewed Travis Kimmel, the president of Real Vision, our friend, a big friend and fan of the show, at Colorado Travis on Twitter. You can check him out. Let's overlay. One of the things we talked about is how there are relationships to things, and sometimes it blows people's minds. Here's Treasury inflation-protected securities or inflation-protected bonds. So what do you see? They look at this nice relationship between TIPS and GDX. So keep in mind in the future, if you're a low-risk investor and you don't want to play a leverage play on gold, which is mining stocks, one thing you can do is you can use TIPS. Again, they're Treasury inflation-protected securities. So what you see here is GDX is headed down. TIPS are headed up, saying pretty much at all-time. I don't know if they're at all-time highs. It might be. At least from here, it looks like they are. So what does this mean? You see these jaws, this gap between them. So what this is telling you is either TIPS are right and GDX is undervalued. A lot of people are nodding their heads right now saying, yes, totally agree with that. Or GDX is right and TIPS is overvalued. And TIP bond prices, inflation-protected bond prices are coming down. Inflation-protected interest rates are going up. That is not a good sign of the market. Now, this is why I look at GDX as a proxy of liquidity. Another way we can look at GDX is through the eyes of EEM. And let's take a look at that, because these two are often in sync together. Not quite as perfect, but pretty good. You can zoom out and see that there is a decent relationship between them. And as you're seeing, there is the jaws here again. So emerging markets sitting at, we'll look at pretty much I think they're at all-time high, very darn close to their all-time high. And GDX is saying, hey, wait a minute. So once again, either TIPS and EEM are right and GDX is undervalued, or GDX is right and the opportunity is to the short side of TIPS and GDX. I'll let you decide, but unless we see a bottoming pattern here and getting across this 50-day moving average, but usually you see a flush down first. That's kind of what I think is going to happen. Market doesn't like that idea. I know a lot of investors saying, no way, man, no way. Emerging markets, bullish across the board. We kind of just touched on that, but let's take a look at EEM and let's zoom out. Where is that? Here it is. Look at that, all-time highs. Either you think this is the biggest breakout in emerging market securities, or this is the biggest fake out because gold mining stocks are going to yank this down. You decide how to play it. You kind of know my view is the dollar, when the dollar rallies, man, emerging markets is in big trouble. We talked about that on the macro show about all the people who are long other currencies and short the dollar. Usually that is a reversal. How about everyone's least favorite bond, ETF, except mine, TLT. Of course, as Bond King, you know I'm very interested in this because I think a reversal here, along with a rally in the dollar, will totally unwind the markets. I do believe that's coming. We've again talked about that on the macro show. Ultra short-term prices now flip slightly bullish. No major trend change. I mean, you don't look at this and say, hey, this is it. But what I do look at is these other momentum signals. So the 3-month is still negative but rising. 6-month is negative and still falling. 9-month is negative and rising. So these are positive indicators. I'm looking at these saying, okay, and that means the 6-month likely to change soon. And what do we see on TLT? Well, we see what appears to be a bottoming here. Now we can go back out. And even though this is not a linear line, we can see it is bottoming just above its prior all-time highs going back to September of 2019. It is, we know the CTA or quant computers are done selling, and we see volume has dropped off here as sellers appear to be tapped out. If this gets a rally up here, the CTA is buying back in, back at their early January price values. This would shock the markets. Nobody is expecting a bond rally except for big fans of the Bond King and who are members of the Bond Kingdom. Some of you are, and I appreciate that. Some of you aren't, but still fans. Still love you just as much. High yield bond, and you'll be welcome. Don't worry, you'll be welcome in the kingdom when the time comes. High yield bonds, HYG, bullish across the board. So, I mean, you keep seeing this risk assets, bullish, bullish, bullish. In the middle of a pandemic, in the middle of a recession, who would have ever guessed all of that would happen? And we have to zoom out and look at high yield bonds. There's not much movement here. They're kind of stuck toward the high side of their 2-year price range. Remember, when high yield bonds go, so does the rest of the market. Watch GDX. Again, one of the key things that I am looking at is indeed GDX. Gold futures, no surprise. What we should see here is nearly bearish across the board. No changes in gold futures. 3-month momentum is negative, but rising. 6-month is negative and falling. No change on the 9-month. Let's go look at gold futures here. And what do we see? Falling, across the 50-day moving average and found resistance. It's gotten over it, but quickly back down. And I keep saying, 1800 to 1820 is likely support. We see the convergence of the 200-day here and the 50-day. Don't really need to see that. And what does this tell me is we're going to revisit this 1800 to 1820 as it continues to hang out underneath the 50-day moving average. Miners often lead the metal. Remember that. Miners lead the metal generally. If the miners are headed lower, well, so too is the metal. Silver futures, a little bit different story on silver. Ultra short term has flipped bullish across the board. Short term has flipped bearish across the board. I don't really have a major call on this at all. I don't really follow silver. I put it on here because many of you asked, and I said, look, it's got to get through this 27. Price went up there, bam, hard rejection. Unlike gold, it is over its 50-day moving average across. It tagged it. It's trying to find support here. Can it do it? But remember, you've got sellers at the $27 to $28 price range, and you've clearly got buyers between all the way down here at say 22, 23 up into this $25 price range. I still think you watch the mining stocks, they'll tell you where the metals are going. Last but not least, the dollar. Many people's least favorite, but hey, if you're a dollar milkshaker like some of us, then you're a fan of the dollar. Hey, if you're a bond bull like me, then you know that what is the dollar? It is a zero duration bond. So it's pretty hard if you're bullish on the dollar or bearish on the dollar, you should be bearish on bond price. If you're bullish on bonds, you ought to be bullish on the dollar. Their relationship can be split apart, but doesn't stay that way forever. Ultra short term, bullish, flip on the annual momentum. All the rest of the signals are bearish. But look at what's happening down here on these signals. The 3-month, 6-month, and 9-month. the 12-month, I think, is still red. It's still negative. Yeah, pretty sure it's red. But notice that these 3, 6, and 9-month are negative but rising. That is a key change. When I can get the pieces of the newsletter done, I'm going to show you some cool, interesting charts on that. I got the name. We need to get a logo done on that pretty soon here. But here's the dollar, and we're seeing a different setup. Now, this prior setup over here back in October 2020 was a nice setup. It broke down. When you look at the annual momentum and you look at the other momentum signals, you start to see a different picture here. So if bond prices can go up, and that will drive the dollar. How do we know that? Because we can overlay. It's kind of fun to do. TLT. I don't like ratios, but I like overlaying things. I think you can see a different story. And let's maybe zoom out a little more. And you can generally see when there is a gap between them. One is right. In this case, TLT was right. Dollar came down. Dollar went up. People thought TLT here in purple was wrong. It went up. Now everyone thinks the dollar is right. So far, it isn't really pulling TLT down as much as you'd think. If the dollar was right, then you expect to see TLT crumbling. What this tells us is the probability is TLT is right on this view. Its rally will trigger a rally in the dollar. So anyways, my friends, thank you for being fans. Thank you for watching, supporting the channel, supporting me. And we will be back on Monday with a macro show again. Talk margin debt. The content of this video is provided as educational information only, is not intended to provide print investment or other advice. Serial is not to be construed as recognition or solicitation by selling security, financial instrument, or to participate in any particular trading strategy. This video was prepared by Steve Van Meter on personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advisors Inc. or Steve Van Meter Financial.